Tata Technologies. Three major technology companies of Tata Group, TCS, Tata Elxsi, and Tata Technology have declared in their Q3 earnings. For the quarter gone by, it's Tata Technologies which has performed better than the already large tech stock of the group. In terms of bottom line and top line, Tata Technologies posted better growth in double digits compared to TCS and Tata Elxsi. In constant currency, revenue growth was also better for this one. But to know more about the financials and the outlook going forward, we're being joined by the company's Chief Executive Officer, Warren Harris. Well, evening there.
Hi, and thank you once again for your interest in our company.
All right, pleasure is all ours, like I always say. Let's start off with the basics first of the earnings there. Revenue growth at 11.6% constant currency YOY. That's the number which has come in. But it's a tad slower than what the company has registered in the first half of the financial year at 15.5%. What explains that? Has then been a ramp down of the second largest customer? Given more details and what can be expected going forward?
Sure. Q3 is typically for all IT and engineering services company. It's typically a soft quarter on account of the festivals and the Christmas and the New Year holidays. But as you referenced, we also were grappling with the headwinds associated with the transition that we're going through at VinFast. We've just completed the development of 2 electric vehicles. We're transitioning the team to launch support. And so we've had to redeploy many of the resources that have been engaged at VinFast on other accounts. That transition for us began in the sort of August timeframe. It accelerated in Q3, and we largely expect the transition to be completed in Q4. Growth will taper Q3 and Q4, but we're extremely bullish about FY25.
All right. Essentially, I'd want to know, now with this, how much does the revenue contribution come down for VinFast in this quarter? And what kind of impact can we anticipate? Sure, FY25 is when you expect the normalization to kick in completely. But for the quarter, the ongoing quarter rather, what kind of % revenue contribution can be expected now from VinFast?
Well, I'm not at liberty to communicate the specifics of revenue and the impact that the runoff at a company like VinFast represents. But rest assured, we were able to squeeze out growth in the third quarter. We expect to protect that in Q4, and then we'll go into the new fiscal year with a very solid base for FY25. And so, we continue to be very excited about the tailwinds that surround our industry and the momentum that Tata Technologies itself is building.
Sure. If not for an individual breakup, can we look at the top 5 clients composition there? The top 5 clients, which include JRR, Tata Motors, and VinFast, contributed to 57% of the overall revenue and 71% of the services revenue in H1 of the financial year. Do you expect the number to come down by the end of the financial year?
Well, what I will say is that we are engaged in delivering next generation product for our top customers. And so the relationships that we have are incredibly strategic. When we are entrusted to develop next generation electric vehicles, we're really being entrusted with the family jewels of the companies that we work with. So we expect our commitments to each other to be strong and to be sustainable. And so we think that in terms of client concentration, medium to long term, you'll see a change in that. You'll see the top 5 customers start to come down. But I think in the near term, it's going to be predominantly range bound, and I think we'll continue to come in close to where we are, at least for the foreseeable future.
Okay, so the same composition for the quarter gone by, or let's just say the second half of the financial year. And over the medium term, you expect the number to come down by what, if you could reiterate?
Well, I think medium to long term, we would expect the dependency that we've had on our top clients to continue to come down. We had 39 customers in Q3 that represented more than $1 million of annualized spend with Tata Technologies. That compares with 34 customers the year before. So we're growing the base of our pyramid. In addition to continuing to deliver value to our strategic customers, we are adding new logos that represent the top ER&D spenders, not just in automotive, but in aerospace, transport, construction, and heavy machinery. And we believe that will provide a very solid platform from which we can grow in the future.
Not specific numbers out there, but nevertheless, I'm going to push my luck here where I check with you. If 57% is what the company clocked in, are we looking at a number which is going to be sub 50% from the medium term to long term scenario?
Well, what I would say is in 10 years ago, 2014, 75% of our revenues was delivered from Tata Motors and JLR. Last year, at an aggregate level, they represented less than 33% of our business mix. That has happened at the same time that we're growing the contribution from those customers, and so we will continue to work hard to retain the confidence and the commitment from our top customers. But we're also committed to growing the base, and so medium to long term, the concentration that we have, top 5, top 10, will continue to come down.
All right. Essentially, if I'm being more specific about VinFast, what was the extent of the ramp down there? What was the reason? And how much was the revenue which was lost, essentially, if you can quantify in the quarter?
Well, what I would say is that, as with most new energy vehicle companies, when they develop product, as soon as they have product that's ready for market, they pivot their attention to building vehicles and selling them. And that's what we're seeing at VinFast. They have developed 4 electric vehicles that are now being sold or ready to be sold, not just in the Vietnamese market, but also in the federal markets in the United States and in Europe. And that's where the leadership team is spending most of their time now. But they are investing in additional manufacturing capacity, particularly with the ground that they've broken in North Carolina. And that will more than double manufacturing capacity by 2026. That's going to require an investment in new products. So towards the end of this calendar year, we would expect VinFast to reinvest in additional vehicles. And as a strategic partner, we would expect to be very much a part of that.
Fair point. Let's also talk about your margin profile, which has expanded, of course, but not hit the 20% guidance that you've earlier suggested, 18.5%, if I'm not wrong, if I've got that number right. Perhaps that's the margins that we're looking at. Sure, there has been an expansion from 16% kind of levels that the company was working with in the previous quarter gone by. Explain us about your margin growth drivers, and when are we going to be hitting, or let's just put it, when is the company optimistic to hit that 20% mark by the quarter gone by and the quarter to come?
Yeah, we actually grew margins from 16.9% in Q2 to 18.3%, so 140 basis point in improvement. That was driven by a number of things. A change in mix. We did a lot of test and validation work for VinFast specifically in the second quarter. And those services we buy in from test houses in different parts of the world. So business mix has improved. We had the impact in Q2 associated with the relatively generous increments that we rolled out for this fiscal year. We've been able to mitigate that through the standard operating levers that are appropriate for a company like ourselves. So more offshoring, improvements in productivity, and improvements in our people pyramid. So we are confident that we can protect those margins as we move towards the end of the year. The North Star of 20% margins that I shared with you previously, that's something that we expect to get to as we scale the business. It's not something that we would expect to get to in the next couple of quarters. But we would hope to incrementally squeeze out 30, 40 basis point improvement over the course of the next 12, 18 months, and continue that again towards that end goal of 20% plus margins that we hope to be able to not only achieve but to sustain and protect.
Sure. I'd also want to understand from you, do you think the company would be able to clock in a margin which is going to be northward of 21% by the end of this financial year?
I certainly do not believe that we're going to be able to achieve 20% by the end of this financial year. But if you look at our business mix, unlike our competitors, we're not an India out company. So our onshore, offshore balance is close to 50%. Our peers are closer to 65, 70%. So we believe that there's more that we can do from an offshoring perspective. We believe that the efforts that we're affecting in terms of campus recruitment will continue to inform improvements as far as the people pyramid is concerned. And we are taking technologies like Gen AI and looking at ways of further improving the operational efficiency that we have inside of our business. We think that incrementally those things will contribute towards an improving margin story. But it's certainly not something that we would expect to drive breakout in improvement in profitability at any time in the next 2, 3, 4 quarters.
All right, point well taken. Well, also, what drives the services margin above the industry level? That seems to be a bit on the higher side, of course. Is there a scope to further improve these margins of the technology solution business?
I think that there is. In Q3, we enjoy an uptick in our products business as many of our customers, particularly in the United States, renew maintenance contracts. Those maintenance contracts tend to come at a lower margin than primary license sales, and so in other quarters in the year we enjoy much improved margins from products. We've also started to drive efficiencies associated with scale in and around our education business as we build out the education proposition and we lay claim to the ownership of more and more of the content. We ourselves are able to harvest more of the value, and so I would expect technology solutions to drive improved margins as we look forward.
Okay. Let's talk about the growth in the automotive segment versus the growth in aerospace. If you could put in the numbers there and also provide us an outlook of these two businesses going forward.
Yeah, I think I'll talk about growth in tangible terms, but also in terms of deal signings. We've seen robust performance from automotive in Q3, and we certainly expect that to continue. We've won 4 out of the 5 deals that we announced are automotive deals. One is a $50 million deal with a North American OEM. That's all about adding capacity in offshore locations like India. We've won a top hat with a Chinese OEM, and we've also won embedded deals with a luxury OEM in the UK and a digital thread initiative with one of the new energy vehicle companies in the US. So the health of the automotive business continues to build. But if I'm excited about anywhere at the moment, it's aerospace. The empanelment that we secured at Airbus, the work that we've done to open offices in Toulouse and Hamburg, the accreditations that we've been able to achieve with a highly regulated company like Airbus has really positioned us well to discharge a very sizable order book. And you may have seen last week the announcement between Airbus and the group in and around helicopters being assembled and built here in India. That strategic relationship between the two organizations provides tailwinds for us, and we certainly are planning to leverage that in support of a breakout performance in aerospace as soon as FY25.
Tyrus, the company has 1 in 5 large deals this quarter. Includes one deal with over $50 million in TCV, another with $25 million in the TCV. How does that compare with your typical order win run rate of the company?
We were very pleased with large deal wins in Q4 and Q3 rather, and we were very satisfied with the two largest deals that you pointed to, a $50 million TCV and a $25 million TCV deal. The growth engine to our business is large deals. We are very happy when we win $1, $2, $3 million deals. But that's like oxygen. It allows us to keep the lights on and keep the business churning. But it's the large deals that really inform our ability to be able to grow. So we're very pleased with performance in Q3, and we're going to work hard to replicate that in Q4 and beyond.
Tesla is also one of your clients, right? I mean, the shares have tumbled almost 12% after the CEO, Elon Musk, warned about the sales growth, which could slow down this year. Of course, despite the price cuts that they've taken, the margins have already been hurt. What kind of sense are you now developing from this? What contributions come from this client, and what's the outlook going forward?
I can't comment specifically on what we're doing with Tesla because it's covered by confidentiality agreements. But what I would say is that we do see some nervousness in the EV space in North America. I think because of the statements not that Tesla have made, but the likes of GM and Ford have made, and I think that there's some nervousness about an administration change at the end of the year and what impact that will have on the Inflation Reduction Act. And it's the Inflation Reduction Act that is providing incentives that are stimulating a lot of the EV sales. So we think in North America that there is some concern. But what I would say is that the industry, and this is the global automotive industry, has made the decision to go all electric, and so the pendulum swing has been affected. And when we invest or when we support our customers' investments, we're investing in product that will define their competitive position in 3 and 4 years' time. So short-term volatility or a downturn in unit sales does not typically influence in any way the investment in new product.
Market is also expecting a rise in the IT budget ahead of the US presidential elections. What's your assessment? What are your expectations there? And also in the run-up to the interim budget that India would hold, what sort of expectation do you have per se from the IT industry point of view?
Well, I think it's in the interest of India to provide an environment that supports the IT sector, given its importance to the economy, and I think in markets overseas, the importance of productivity and digital transformation is really being acknowledged not just by the private sector but also the public sector. So we would expect sensible government legislation to reinforce and provide the support for what is not only of interest to an industry like ourselves, but is also important, I think, in terms of the overall economy and the countries that the global economy serves.
A proposal that you think may otherwise work in the favor of the industry. Can you be more specific about that, if possible?
I don't like to comment on what's right for specific governments. All that I would say is that I think it's in the interest of the Indian government to provide an environment here that is aligned with the interests of the sector. The sector has made such an important contribution to the development of India over the last 30 years, and I think it has much more potential to do that. And I think overseas, we've seen, particularly through the pandemic, the importance of interjecting resilience into supply chains and into operations. The only option that most customers have got is the effective deployment of technology, and so legislation that encourages and promotes that is in the interest, I think, of all stakeholders globally.
All right. Okay. Apart from that, any reduction in GST rates per se on electronics and tax incentives? What generally the expectation is, or rather the request would be from the industry to the government?
Well, I think if we look at it from an ER&D perspective, our business is predominantly focused upon automotive. So anything that promotes the investment in electric vehicles and the sale of electric vehicles, anything that facilitates the improvement in the infrastructure here in India would be very well received. If I look at aerospace, there are certain import restrictions with regard to parts that are central to MRO companies, and I think as India looks to harvest the demand that is coming from the country, it'll be important that the aerospace infrastructure continues to improve and develop. And so I would strongly recommend that areas like that are focused upon, because it will really further and accelerate not only the delivery of product into India, but India's ability to be able to contribute towards it.
All right. The final question that I have for you is, can you talk about the headcount bit? Because that's been the trend which has been observed by the industry. Of course, headcount in India's top 3 firms have dropped by 16,000 in Q3. That's one. And the second parameter that I also wanted to bring in here is the amount of, salary hikes that have come through in the quarter. If you could provide in some clarity on that bit as well. How much of operating cost essentially has been bumped up on account of that?
We added 172 people in the third quarter. That's down from the 700 people that we added in Q2. But I think that's primarily driven by seasonal issues associated with festivals and holidays. We continue to be bullish about our prospects as we move into the new fiscal year, and we will have to add capacity to satisfy that. One of the other things that we were very pleased about in Q3 is that our attrition rates, last 12-month attrition fell below 16%. The quarterly annualized attrition fell to pre-pandemic levels of 13.6%. And so, the improvement that we are driving in terms of attrition is lessening the pressure on our talent acquisition teams. And so we're driving much more efficient and cost-effective processes as far as building the headcount and capability that's going to be required of the business as we look to grow in the future.
Right, Mr. Harris, we're just going to leave it at that. And thank you so much for taking on the time and having this conversation with us.
Thanks always for your interest in Tata Technologies. Thank you.
Pleasure. Well, with this, it's a wrap. Thank you so much for tuning in.
Thank you.